Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right, so today we're talking about tax trader status for my Forex squad. I'm starting to get a lot more calls about Forex because, as we start to get towards the end of the year, people really start looking at how much they've earned, how much they've lost, and now it's starting to generate some questions. So let me start out with a couple of caveats. So number one, if you are trading Forex, I do not, under any circumstances, recommend you prepare your own taxes. Reach out to a tax professional that knows about Forex, that knows about all the different types of elections and all that stuff that goes with Forex. Do not do this yourself, because Forex is not like the common home business, like in network marketing or something like that. When it comes down to Forex, you're dealing with people with too many initials, okay? Because you got the IRS, you got SEC, you got, no, just, just none of that stuff, okay? So that's number one. I do not recommend that. And number two, is whenever I do videos like this, there is always going to be someone who wants to come for me, either in my comments on Facebook, in my inbox, or on my YouTube channel, saying what I'm saying is not true. And I will tell you right now, I am content to let you be right. Okay, I really am. So I'm not going to argue with you. I don't do the whole back and forth. I'm just going to share with you what I know, where there is case law to back up what I'm saying. And you can do what you do after that, okay? I just have to put that out there in the beginning because I'm sure there will be someone, and so I just got to let you know. All right, so with all of that out of the way, let's get down with trader tax status. So this has really become more of an issue and more of a question for people when it comes down to claiming losses. So I want to talk about that. First of all, for trader tax status, there is no election. You don't say, okay, I'm just going to, elect trader tax status and I'm going to deduct all these losses. It does not work like that. It really is a big picture thing, where you put together all of the components and see what you get. Essentially, it's like a little puzzle. So with trader tax status, you either qualify or you don't. You can qualify 1 year and not qualify the next year. And this is something that also can be determined at the end of the year. Again, it's not like an election that you have to make at the beginning of the year to say, I, will be a full-time trader to get this tax status. That's not how it works. You look at that at the end of the year, look at the evidence of all that you're doing, and then make that determination. So what is the big deal though? When you qualify for trader tax status, then you get to deduct your trading expenses as normal business expenses. So we're talking about business expenses that allow for like a home office deduction, your education, your, going to conferences, startup expenses, all of that. Those are the types of deductions that you can take as when you have trader tax status. Now, if you are an investor, then all of that stuff doesn't count. The Tax Cuts and Jobs Act removed the deductions that were subject to a 2% floor. Those aren't there anymore. Other miscellaneous deductions is not there anymore, where people claimed other types of expenses. And as an investor tax status, then you're limited to that $3,000 per year capital loss. Okay. So qualifying for trader tax status is really a big deal when it comes down to claiming expenses as it pertains to your trading business. But again, it's not something that you just say you're you have trader tax status or you qualify for trader tax status. Again, it's a big picture. So now when it comes down to my full-time traders generally do not have an issue qualifying for trader tax status. Part-timers can also qualify, but it's a lot more difficult. So the reason this is important right now is that if you go and say, okay, I qualify for all of, for trader tax status, and you have all of these losses, then you're going to really open yourself to more scrutiny from the IRS, because they really do look at these, these trading businesses with a thicker lens, right? They're holding a microscope to you to look and see if you're actually do qualify. There is no law. There is no concrete law that says if you do this, you qualify. If you don't do this, you don't qualify. It's more subjective. It's also based on, prior case law, to where you start to build this picture. So there's no, there's no concrete thing that says if this one is missing, then you won't qualify. Again, it's all a big picture. And I keep reiterating that, because there's going to be someone that says, well, where is the law? Listen, I'm telling you what it is, and you do what you do. All right. So let's talk about qualifying. Like, how can you qualify? All right. So you either trade full-time or part-time, and it's for a good part of the day and almost every day that the markets are open. All right. So you've got to be active. Okay. And active in this sort is, active in the IRS's eyes is different than maybe active in your eyes. Okay. You might be saying, okay, well, I trade every day, but if you every day might be every 2-3 days for you, who knows? All right. But you've got to be trading for almost every day that the markets are open. You're spending more than 4 hours per day almost every day the market is open. Remember, that's key. Almost every day that the market is open, you're spending 4 or more hours on your business. That can be active trading, that can be accounting, that can be research. And I highly, highly recommend you log your time. Whether you have a written log that logs your time, you can get an app, you can get something that is going to document where you basically clock into your business until you clock out, and you document what you do during that time frame. Number 3 is there's no random lapses in time. Okay. Now, there's a difference between lapses in time and like taking a vacation, right? The IRS isn't saying that you can never leave your computer, that you must trade every single day, 365 days of the year. That's not what they're saying. But what they're saying is that you have to be really, really continuous. So it's not that you trade for the month of January, you take February and March off, then you jump back in April, you might take off for the summer, and then you come back in August and September. The IRS is looking at that and going, absolutely not. And think about your job. If you have a job, would that work for your job? If you decided to work 1 month, not come back for 2 months and all? No, it would not work. So it will not work for a trader tax status. Where am I? I think I'm on number 4. So looking at the frequency, again, close to 4 days a week, almost every day that the market is open. So it's got to be frequent. Now, this is the next one is what, people have heartburn with, right? It is, looking at your volume. The recommended minimum is 720 trades per year. A buy and sell each count as a trade. So if you buy one, you sell one, that's 2 trades. But again, there's other things. Like if you do 720 trades in a day, for instance, versus over the year, that makes a difference as to whether or not you qualify for trader tax status, right? So that's why I said it's a big picture. So it's not just that you have a minimum of 720 trades and go, oh, I qualify for trader tax status. No, it's a big picture. And that's why I say people have heartburn with that, because they'll look at this and say, okay, well, I have this number, so therefore I should qualify. And it's not just that. Okay. The next one is the holding period of 31 days or less. Now, I know that there are options traders. Options traders generally have a harder time qualifying because their average holding time is over 31 days. So there's ways that, some people have made adjustments for that, but by and large for options it's usually harder. And that, but for trader tax status, they look at your average holding of 31 days or less. The next one is your intention. Do you intend to make money doing this? And this goes along with, determining whether or not you have a business or hobby, right? Because, hobby losses don't count in Forex anyway. Toss that out the window. But but what is your intention? If your intention is to make money with this, to make a profit, okay, then but your other activities, you just can't say, oh, well, I intended to make money, I didn't. They're, again, big picture. Okay, so if you're intending to make money, if you've got a minimum of 720 trades and they're looking at how many days and all of this, again, it's all a big picture. And then the next one they look at is your business deductions. Okay. Business deductions, I swear, gets people in more trouble than anything. But when you are, when you have a particular business, every business has its telltale signals based on their tax deductions, right? If you are Forex traders, you might have multiple monitors, you might have some subscription services. You're gonna have you definitely need to have a home office, right? If you're saying we're doing this seriously, then you're gonna have a home office. But one of the things that the IRS asks of us as tax pros is the due diligence part. And one of the due diligence questions that we get asked is, are there any expenses that are missing that should be present with this type of business? So if you are not deducting, stuff that's common in the Forex industry, that is one of those things that might signal a red flag that maybe you don't qualify for trader tax status. So, not having trying to qualify for trader tax status and saying that you do, but not having the business deductions to match, that, tends to be something a little funky. Okay. But now let's talk about what does not qualify. Okay. Let's talk about what does not qualify. All right. Using automated trading software does not count in you qualifying for trader tax status. You have to be actively involved, materially participating in this business. Hiring an outside manager to do the trading for you, you don't qualify for trader tax status if you're hiring someone else to do it for you outside. You might just be giving them money and all that. That doesn't mean that you qualify for trader tax status. They might, but you don't. Or trading in retirement funds. There are people who trade Forex, whether it's, different types of retirement funds. That does not count towards trader tax status. It's got to be taxable trading income that helps you qualify for trader tax status. And also, the question I get a lot is about business entities. Does establishing a separate business entity, whether it's an LLC or a C Corp, qualify you for trader tax status? And it does not. Just having, setting up a separate entity does not mean you qualify for trader tax status. You really have to look at the activity of what's going on and all those other things, that I talked about, the frequency of trading, the volume of trading, how often are you trading? Do you have any gaps in time and all of that? It matters even if you have a separate business entity. Are there bonuses to having a separate business entity? Absolutely. There are, definitely benefits to that, but that does not automatically make you qualify for trader tax status. And you just need to understand that. All right. And here's another caveat. If you are already in the home business industry and you're branching off into Forex as another stream of income, do not try to deduct your Forex expenses with your current home business. This needs to be something that is completely separate. Okay. So I just wanted to, to put that out there because I see a lot of, home business owners that have multiple home businesses, whether they're network marketing, e-commerce, all of that. And then they decide to throw Forex in the mix. But do not try to deduct these two things. They're completely separate. Okay. So the main thing that I can tell you to help you qualify for trader tax status, of course, is keeping bossed out records for, for what you're doing, the time that you're spending, the trades, your bookkeeping, all of those things that come with running a business, you need to have on point, but especially the time that you're investing in your trading. Like I said, you can use different types of software, apps, or whatever to track your time so that in the event that you are audited, that you have this log of your time and what you're doing, so that, if you do say, hey, I qualify for this, and the IRS comes back and says, oh, no, you don't, but then you have all the records of your activities. And that is what's going to help you, because on the flip side is if you say you qualify for a trader tax status and then the IRS says that you don't have any records, and they're going to go back and disallow all of those expenses, and then you're going to wind up paying this money back. Okay, especially if it if it creates a huge refund for you. So qualifying for trader tax status is definitely, there's definitely benefits to it, but it's just not something you wake up today and decide that you're going to do that. You actually have to put forth the activity, document that activity in order for you to qualify for this. Okay. So that is it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come right here to get your questions answered about your home business taxes. All right, have a great day, and I will see you all next time. Bye.